Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market update. Hope everybody is doing well. So in today's markets, traders repricing to the upside. The comments made by Jerome Powell yesterday, we now have gains pretty much across the board. So seemingly very negative sentiment coming into the close yesterday. Today, off of no news, investors just simply buying the dip. And as we were saying in yesterday's video, guys, we were coming up on some very, very cautious fib levels here. If we put this on the chart, you will see that on the SPY, most specifically, we were coming down into our 38.2%. If we would have had another red day, potentially with bad tech earnings over the course of the evening tonight, well, we could have potentially dove into the 0.5 to 0.618 territory, and that would have opened the door for the bears to potentially set the daily downtrend, sending us into weekly consolidation. So the bulls really had one job for today, and they pulled it off very, very well with a beautiful recovery, saving the capacity for a daily downtrend. So the markets just continue to grind higher, but keep an eye on your February seasonality. Usually we do have a slight little uptick into mid-February here, and then potentially receding for the remainder of the month, and usually March as well is not a very positive month for the markets. So markets do tend to grind higher right now. However, we are still in overbought conditions on a lot of your indexes. So I do have the same sentiment as yesterday, guys. That is just a time to be cautious, and especially for stocks that have rallied far past their all-time highs, can be a good time to write some covered calls, protect and hedge the portfolio a little bit, because I do believe that we are on the last weekly legs of this rally right here. So in today's video, guys, we are going to cover three major earnings that I have for you guys: Meta, Amazon, and Apple. We're going to do deep dives into those, and we're obviously going to cover our major indexes, see how everything is shaping up after yesterday's negativity into the positive outlook today. And lastly, we'll take a look at our major tech stocks as well. Portfolio update will be tomorrow after the close for your Friday recap of the trades. So without further ado, guys, let's get right into it. SPY up 1.31%, QQQ up 1.18%. Everything very healthy across the board, guys. And if you asked me yesterday night if I did think that the bulls were going to completely reverse this like this, I did not think that that would be the case. Usually after such heavy momentum to the downside coming to a close, we usually get a little bit of continuation into the next day, and I was heavily watching out for the levels of that continuation. But really, from the start of the morning, we just continued to grind higher in anticipation of tech earnings, and tech earnings were an absolute blowout to the upside. So we're going to take a look at that, obviously. So in terms of the heat map, let's take a look at what happened today. So you'll see that all markets, all indexes rather, across the board, all segments of the market, very, very healthy, broad market recovery. That is what you want to see. I would have been a little bit nervous if the recovery would have only been in big tech over the course of the day here today, but you see that the entire market participated after yesterday's sell-off. On the one-day relative performance, this was yesterday, and now this is today. So complete shift in terms of your losses towards the gains. All segments performing very, very well. Financials performing a little bit slow to the downside here, only 0.21%. But as a whole, very, very healthy market. So before we get into more technicals, let's get into some earnings, guys. And we're going to start it off with a bang. We're going to start it off with Meta. So Meta posting some beautiful results on the day. You can see in the after hours, they're up almost 14% to roughly $450. Obviously, new all-time high for Meta. What exactly happened on the call? Well, Meta absolutely crushed it. Beat EPS by about 10% in relation to the estimate, and beat revenue by about 2.5%. Now let's do a quick recap of where Meta was standing in 2022. So 2022 was known as the year that Meta kind of came undone, as they were posting really, really soft EPS and really, really soft net income as well. Their revenue also had a little bit of a slip back in 2022 in relation to their good years of 2021 precedingly. You could see that the revenue was mostly flat, but now we do have continuous revenue expansion on Meta. 2023, they gave great guidance for 2024 as well. So take a look here, guys. I also wanted to present you the free cash flow that they were bringing in, right? So this is another metric we bring in. In the later parts of 2022, their free cash flow was absolutely crushed. This is a company that should be bringing in anywhere between $7 to $15 billion of free cash flow per quarter. And during 2022, when they had a lot of things going on, they are obviously having a big fight with Apple in terms of their rights to be on the App Store and advertising through Apple's App Store as well. And they were also spending a lot of money on the Reality Labs division for the metaverse and for their VR headsets. Now, that hasn't changed, but what has changed in 2023, Mark Zuckerberg said this is going to be the year of cost efficiency, and they really did a good job of cutting the number of employees at Facebook, cutting down on operating expenses, and really focusing on your profits. And that's exactly what Wall Street wanted, and we'll see how well they delivered on that. So let's take a look at the earnings. Meta shares jump 15% after profit triples. This is on a quarter-over-quarter basis. So this most recent quarter in relation to Q4 of 2022. And company announces the first ever dividend. This was really big news here, guys. So let's take a look at some of the numbers here. Daily active users on the upside, beating expectations, 2.11 billion versus 2.08 expected. And the monthly active users as well, 3.07 to 3.06 billion expected. So nice little beat here on your active users count for both the daily and monthly. Net income more than tripled to 14 billion for the quarter, from 4.65 billion a year earlier. So that is your triple on a quarter-over-quarter basis, looking at the previous year to this year Q4 ended. Sales in Meta Reality Labs passed 1 billion in the quarter, though the unit recorded a 4.65 billion in losses. And this has been the case for the past couple of years. Meta usually loses about $4 billion a quarter on the Reality Labs. In my opinion, a bit too much. But here you go. Meta quarterly revenue growth back up into double-digit numbers. You can see that was what they were averaging pre-pandemic, over 20%, and they have now finally recaptured that year-over-year percentage change for a quarter back to 24.7%. Very, very good. Meta said that its headcount was 67,000 as of December 31st, representing a 22% year-over-year decrease following its layoff. So once again, the year of efficiency here. Part of Meta's financial recovery over the past year was driven by Chinese retailers, which have bolstered spending to reach users across the globe. The chief financial officer, Susan Li, most recently highlighted the significance of business from China in the company's third quarter earnings. Li didn't name specific companies, but fast-growing upstarts Temu and Shein, which originated in China, have been pouring money into ads in Facebook and Instagram. So good little news here out of China. Chinese firms advertising a lot on Meta. Now let's take a look into the numbers, guys, and they were very, very good. So let's take a look at their exact breakdown here on the earnings. You'll see that here is their total revenue for the year, representing a 16% change from 2022. So up to 135 billion almost, up from 116.6 in 2022. Very good, 16% change. And here is the kicker, and we're going to look more into this down low of how this was possible. Net income up to $40 billion for the year, pretty much up from 23 billion. That is a 69% increase in the bottom line. That is absolutely beautiful, with costs remaining the same. So they grew their top line, remained the cost the same, and they increased their net income as a byproduct by a lot. That's exactly what you want to see. So here's some little details here. Ad impressions and price per ad. In the fourth quarter of 2023, ad impressions delivered across our family of apps increased 21%. Very, very good. Price per ad increased 2% year over year, so pretty much keeping up with inflation here. For the full year 2023, ad impressions increased 28% year over year, and the price per ad decreased by 9% year over year basis. So a little bit of a slowdown on a year over year basis, but they were able to increase it on a quarter. But I like to see this volume increase right here. Revenue was 40 billion for the quarter and 135 roughly, an increase of 25% quarter over quarter basis from 2022 and 16% year over year. Very, very good. Total costs and expenses remain flat. We covered that previously. Share repurchases. Here's a big one, guys. We repurchased 6.32 billion and 20.03 billion of our Class A common stock in the fourth quarter, respectively. Very good. We had 30.93 billion available still for share repurchases, and they announced $50 billion of new share purchases today. So that's $80 billion, guys. Meta's trading roughly right now at about a $1.1 trillion market cap. Right, so if we just do 80 divided by 1,100 roughly, that's about 7% of their outstanding stock, guys, that these guys can buy back over the course of the next year with that $80 billion. That is a very considerable amount. Love to see it. And another little boost here on cash and cash equivalents. Cash equivalents were up to 65.4 billion, very good. Free cash flow was 11.5 billion and 43.01 billion for the fourth quarter and full year 2023. So on the quarter, 11.5 billion dollars in free cash flow and 43 billion in total free cash flow for the year. That is excessively good here, guys, because as we were saying back in 2022, they were really struggling here bringing that free cash flow up on a quarter over quarter basis. And now you can see they're back to high levels of free cash flow and they're back to high levels of cash and cash equivalents as well. So everything looking very good. And obviously we now have the dividend. Today, Meta's board of directors declared a cash dividend of 50 cents per share, which will be payable in pretty much March 26th for everybody holding as of February 22nd. So first time in Meta's history that they're choosing to not only buy back shares with that free cash flow, but now opting to pay a dividend as well. Here's the guidance. We expect full year 2024 total expenses to increase roughly between 94 and 99 billion. So you saw the total expenses for this year were roughly 88. Now they're forecasting 94 to 99. So a little bit of a 10% increase in expenses here, right? This was a pivotal year for our company. We increased our operating discipline, delivered strong execution across our product priorities, and improved advertising performance for the businesses who rely on our services. We will look to build on our progress in each of those areas in 2024 while advancing our ambitious longer-term efforts in AI and Reality Labs. But investors still not happy with how much money they're spending on Reality Labs as a whole. Now let's break down a few of their numbers here in terms of your balance sheet and cash flow statements here. So here's your consolidated statement of income. You can see very nice boost in revenue here, right? Up almost 16% year over year comparison. Costs are remaining the same. And here is your bottom line improvement here, guys. 67% bottom line improvement, which did translate to a hefty increase in EPS. That is exactly what you want to see. Really high EPS for Meta now at this point. Meta will have no problems increasing EPS in the future if they stay on this path as well. You can see EPS expansion is forecasted to be very, very juicy for the next couple of years. We're talking, guys, roughly in the 15-20% range for the next couple of years, and revenue expansion very decent as well, coming in over 10, about 10 to 12% in revenue expansion. So very good, respecting my rule of 10 and 10, over 10% EPS, over 10% revenue growth as well. So very, very, very good. And a few things that I did want to show you as well is their cash and cash equivalents at the end of the period. You'll see that it is netly up from your 2022 end. Your cash and cash equivalents is now sitting at a cool $42 billion as their long-term debt still only hovers around 38, 39. So now they have more cash than they have long-term debt. That is a beautiful position to be back in the case of Meta. So that is exactly what you want to see. Now let's take a look at their business segments. Business segments doing fairly well. So you'll see that most of their revenue comes from their advertising segment. Total revenue is about 135 billion. Most of it coming from advertising, right? So keep an eye. Advertising here, very nice increase on a year-over-year basis from 2023 to 2022, 132 versus about 113 and a half. But here's the thing, guys, they're spending too much money on Reality Labs, and the math is really, really easy to do, okay? So let's take an eye on how much Reality Labs brings to the bottom line in terms of revenue. So you have 1896 divided by 134,902, and you'll see that they only bring in about 1.4% of total revenue. But here's how much they cost the business. On a quarterly basis, they spent, again, $4.6 billion, bringing over only $1 billion. So once again, a loss leader for the company. They spent $16 billion on Reality Labs here, guys. That's a hefty amount of your net income here, right? So total net income from the family of apps was about 62,871. So if we divide the amount of the loss from the income that they're bringing in from the ads, right, it's 62.8. That's too much, guys. It's 25% of their income that is coming in from ads. And this is net income from your ads. Are they losing on Reality Labs, bringing their total income from operations down to 46.5? That's just too much money. Could you imagine how much free cash flow Meta would be actually bringing in if they didn't have this Reality Labs segment? It would be absolutely crazy. But nonetheless, they have brought in a decent amount of free cash flow for the year here, guys. You can see free cash flow once again down here, $43 billion for the year, increase of 11.5 billion here on the quarter. So everything moving in the right direction for Meta at this point, guys. eclipsing the all-time highs. Valuation at this point is getting a little bit stretched. It's still going to be roughly, even despite that EPS increase, still going to be looking at a price to earnings ratio, especially in the $450 range of pretty much over 35, 36. So is fairly pricey for me to be potentially starting a position at this point, but very beautiful quarter for Meta on the whole. They are truly moving back in the right direction. Now let's move into our second earnings set of the day, and we're going to take a look at Amazon. Amazon as well having a beautiful quarter, and Amazon did exactly what I wanted them to do, guys. They're focusing on bringing more money to the bottom line this year, and I think that they're going to have an absolutely outstanding year. So Amazon up 7.52% in the after hours here, approaching quickly our area of resistance that we highlighted. That was going to be our 165 to 170. We're pretty much all the way up there now in the after hours. So what happened on Amazon earnings? Double beat, but not only a double beat, it was a huge beat, guys. Huge beat on EPS, 25% to the upside. And nice little beat on revenue as well. Just keep a reminder in terms of their financial position on the prior years and prior quarters. So you can see 2022 had a lot of capital expenditures in terms of getting new factories up and running. And they also had very, very high supply chain costs back in 2022 with the resulting inflation from your supply chain disruptions. So they actually posted negative net earnings all the way in 2022. It was not a good year for them. And they were expected to regain profitability in 2023, something that they have been doing. And you can see EPS expansion is back on track for the next couple of years. You can even see in terms of revenue just continues to increase here, guys. Revenue reported for the year is going to be about $575 billion for the year end at this point. They're the company with the second largest revenue stream in the world on a year-over-year basis. The first company being Walmart. So Amazon bringing in a ridiculous amount of sales. It's just a shame that they don't make much money on those sales. Their net margins, guys, have never been the best. They're usually only just a couple percentage points, but they've been doing a great job here of increasing that. So this was supposed to be the year of efficiency for Amazon as well. And they've started off with a very nice touch. So Amazon reports better than expected results as revenue jumps 14%. Very, very, very good. So the focus was on AWS, and we're going to see that AWS actually grew substantially, guys. And not only AWS, but their advertising division as well. So Amazon easily topped Wall Street's expectations for earnings, indicated that CEO Andy Jassy's efforts to rein in costs are paying off. Like we talked about, the company laid off 27,000 employees and ended some of its more unproven bets. It's continued to look for ways to cut costs in other areas, like its fulfillment business. In January, it announced cuts in Prime Video, MGM Studios, and Twitch, amongst other units. This Q4 was a record-breaking holiday shopping season. They also had a record Black Friday and closed out a robust 2023 for Amazon. As we enter 2024, our teams are delivering at a rapid clip, and we have a lot in front of us to be excited to. So let's take a look, guys, in terms of exactly what the breakdown is. So let's take a look here. Fourth quarter 2023, net sales increased 14% to $170 billion in the quarter. Very, very good. And in terms of your net sales, operating income for the quarter increased $13.2 billion in the fourth quarter, compared with only $2.7 billion in the fourth quarter of 2022. So that is once again an increase in profitability from 2022, substantial increase on a quarter-over-quarter basis. Net income increased to $10.6 billion. They used to lose money last year, right? Compared with only $0.3 billion in the fourth quarter of 2022. Huge increase, guys, quarter-over-quarter basis from 2022 for net income. And here's your full year. Net sales increased 12% to $575 billion. Very good. Operating income increased to 36.9, compared with only $12 billion in bottom line operating income at the end of 2022. So very, very solid increases in net sales, operating income. Net billion as well for the year was $30.4 billion. So that gives them a profitability ratio on a net basis, roughly 30.4. Let's do the math together. So 30.4 divided by your 574.8, that brings them a net margin of about 5%. Still good, right? That's exactly what they average over the past couple of years. So nothing bad to say there. Free cash flow. Finally, Amazon posting free cash flow. Let's take a look at exactly how they stood on free cash flow over the past couple of years, and you guys will see that it wasn't that good, right? Free cash flow 2021, negative. Free cash flow 2022, negative. But look, resumption of free cash flow being positive now for the last couple of quarters. Q4 isn't here yet, but you see that the trend is moving in the right direction. That's exactly what you want to see. And this is what I've been talking about, guys, talking about Amazon over the past couple of months, is that they're on the right track, and this year should be amazing for them. This Q4 was a record-breaking holiday shopping season and closed out a robust 23 for Amazon. So once again, that's the headline that we saw in the CNBC article. Held a record-breaking Black Friday and Cyber Monday holiday shopping event. Customers worldwide purchased more than 1 billion items on Amazon and saved nearly 70% more during the 11 days of deals compared with the same period in 2022. So Amazon doing a great job there. And here's something that I did not know. Entered a strategic partnership with Hyundai to bring innovative new experience to customers. In 2024, Amazon will launch online vehicle sales in the US. Did not know that. Starting with Hyundai. In addition, Hyundai selected AWS as its preferred cloud provider to accelerate its digital transformation. Another little boost in sales for AWS there. Starting in 2025, customers who purchase Hyundai's next generation vehicles will have access in all their vehicles to the same hands-free Alexa experience that they have at home. So nice little boost there. In terms of their visibility, now working with car manufacturers. Very, very, very good indeed. So guys, let's take a look at some of their cash flow statements and see exactly how they're standing. Just want to present you a little bit of facts here. So you can see that on the year ending basis, 2023, they grew their cash and cash equivalents from $54 billion in 2022 to $74 billion in 2023 ending. That's excessively good here, guys, because the company does run a lot of debt, and without free cash flow on a quarter over quarter basis, it was tough for them to really build their cash and cash equivalents. But now cash and cash equivalents, as you just saw, are sitting at about 74 billion. So that's going to represent roughly half their debt. So now they're going to build a capacity to start paying down some of that long-term debt. That's exactly what you want to see. Very good cash and cash equivalents generation from Amazon as a byproduct of them increasing their free cash flow over the course of the year. Now let's take a look at a few other things that I had for you guys prepared in these statements right here. So here's some of your segment information, and let's focus on your AWS. So obviously their net sales in terms of their product sales are doing very good, but I want to focus on AWS. Take a look here, guys, on a quarter over quarter basis, right? Quarter over quarter basis, 13%. So very good growth in terms of December 2022 versus 2023. And on a yearly basis, another 13% net sales for AWS, now up to $90 billion. That is substantial amount of growth. And then as long as AWS is still growing in double-digit numbers, that is a very good number indeed. Now, let's take a look as well at your net sales here with your net income. And you can see in terms of versus 2022, keep an eye on this right here, right? So here's your 12 months ended. You can see that 2022, they ended with a net income at a loss. And here's the difference. They now just ended the year with positive net income to the tune of $30.5 billion. So really turning the corner back to profitability. That's exactly what you want to see for Amazon. In terms of their segment highlights, very good growth across all their markets in 2023, 12% North America, 11% international, 13% AWS like we just saw, and consolidated 12%. So very, very good. Nothing bad at all to say about these most recent Amazon earnings. They represent everything that I wanted to see in the company per se. Company doing an extremely good job of finally returning back to profitability, growing that shareholder value. That is exactly what you want to see. And I think they'll continue this over the course of 2023, guys. And watch out, because when Amazon starts generating heavy amounts of profits like this, their valuation is going to come netly down from where it currently is. And it's going to start to be a more attractive bet for investors. And additionally, Amazon, one last thing that I wanted to say, guys, is they may have a very big catalyst in terms of monetization over the course of this year. So here we go, guys. Prime Video's profit surge, a game changer for Amazon stock. This was released back in November. And because Amazon has been hinting at this, they've been hinting about wanting to throw ads onto their Prime Video. So keep in mind, Amazon has a global Prime subscriber base of over 200 million members. While not all of them subscribed exclusively for Prime Video, it's worth highlighting that, according to Amazon's most recent earnings call, Prime Video consistently ranked among the top 2 factors motivating customers to join. So it stands to argue that their viewer base for Amazon Prime is extremely large, and they still haven't monetized it. It's included in Amazon Prime, but wait until they monetize this. Here's the kicker. Amazon, on the other hand, recently unveiled its plan to introduce ads to series and movies on Prime Video in 2024. For members who prefer an ad-free experience, there will be an additional charge of $3. So not only will they be monetizing their Prime Video with ads, which is going to bring even more money to their bottom line, but if you want to opt out of their ads, you can pay a one-time fee of $3, which is also going to be a nice little fee for Amazon as well. So they are doing a number of things strategically to increase their bottom lines. And this could be absolutely huge, guys, with the amount of viewers that Amazon has. This could be a very good revenue growth metric for them. And now lastly, guys, we're going to cover Apple. So Apple, what happening with Apple in the after hours? Well, they had a beat. I wasn't that impressed with Apple's earnings, however, but they did have a beat, got to give it to them. Beat on EPS by roughly 3.85%, and they did beat on revenue, 1.35%. Now, this is the first quarter, finally, where Apple has resumed quarter-over-quarter comparable revenue growth in a very long time. Now, let's take a look at exactly how Apple did in terms of their numbers, and you'll just see, guys, that most of their gains in terms of their net income and whatnot didn't really come from revenue expanding. It came from cost savings. Still good, but I'd still like to see more revenue expansion. So Apple revenue grows for the first time in a year, but China shows weakness. So Apple reported first quarter earnings on Thursday that beat estimates for revenue and earnings, but Apple showed a 13% decline in sales in China, one of its most important markets. So here's how Apple product lines did versus the expectations. iPhone revenue coming in at a slight beat here, 69.7 billion versus the estimate of 67.82. So a slight beat on iPhone revenue. Mac revenue, slight beat as well. iPad revenue, slight miss here. Other products revenue, which is their wearables division, watches and AirPods, 11.95 versus 11.6. So they beat here. So the only one that they're missing on is iPad so far. Services revenue came in a bit short of expectations, but still came in very nicely year over year. And we're going to take a look at that. Gross margin did improve, 45.9 versus 45.3 expected. Apple reported 2% sales growth in the December quarter, breaking a streak of 4 straight quarters with annual revenue declines. Apple's gross margin continues to rise, nearly breaking 46% in the December quarter. Very good. Gross margins and their net margins were about 28%, so very, very good. Apple quarterly net sales, you can see they're finally back to positivity on a quarter-over-quarter basis. Very good. iPhone sales were just under revised. On the street expectations, it grew nearly 6% to 69.7 billion, a positive sign that the iPhone 15 models released in September. This is Apple's first full quarter with iPhone 15 revenue. Apple's profitable services business rose 11% during the quarter to 23 billion in revenue, but it still came slightly short of estimates. But we'll see, guys, this growth is very good. It's one of their highest margin businesses as a whole. And we're going to take a look at that in their financials. Apple showed sales growth in all regions except for Greater China. Now let's take a look at exactly what Tim Cook had to say about this, which fell nearly 13% from the same time last year, potentially stoking fears of receding demand for Apple in its third largest market. It faced increased competition from firms like Huawei. Greater China includes the mainland in addition to Hong Kong and Taiwan. So here's what Tim Cook had to say about this. If you look at the 13, he's talking about the 13% decline here, and then you do a double check to look at mainland China and look at constant currency, the dollar is very strong versus the RMB. And so that first minus 13 goes to a mid-single digit number, but still a loss, Tim, right? And so that's how we did on the phone last quarter. The good news is that we're 4 out of the top 6 selling smartphones in urban China. So Apple still representing the top position for 4 out of the 6 most sold phones in China. So yes, they have been struggling a bit. The competition is up there, but apparently Tim Cook still remains fairly bullish on their capacity to deliver in China. Now let's take a look, guys, at their actual earnings number. Right, so here's what Tim Cook had to say. Today, Apple's reporting revenue growth for December quarter fueled by iPhone sales and an all-time revenue record in services. We are pleased to announce that our installed base of active devices has now surpassed 2.2 billion. Guys, the world population is about 8.1 billion. So, I mean, I'm sure that most people don't have one Apple product. Most people have 3, 4, 5 Apple products, right? But still, for every person in the world, that means that there's roughly 1 in 4 people who potentially have an Apple product, or there's roughly 1/4 of the world's population in Apple products circulating. That's absolutely insane, right? Reaching an all-time high across all products and geographic segments. Very, very good. Our December quarter top-line performance combined with margin expansion drove an all-time record EPS of 2.18, up 16% from last year. So very, very good. Returned $40 billion in operating cash flow, returned almost $27 billion to the shareholders. We're confident in our future and continue to make significant investments across our business to support our long-term growth plans. Now let's take a look at the numbers, guys. Were they as good as expected? Well, that's why you need to look at the numbers, right? So net sales for your 3-month ended quarter, right? So this is going to be in terms of their product segment. You can see product segment roughly flat. But where did it come in good from? Net services. Net services coming in at $23.1 billion over their quarter in December 2022, 20.766. So total net sales, that's what was driving the increase in net sales here, guys, roughly by about 2%. Okay. Their cost of sales, as a matter of fact, as well, decreased. So here's the thing. Revenue was roughly flat. Services was up in terms of their service segment. The cost of sales came down. This is what's going to drive net margins up, guys, is when you have the same amount of revenue, roughly, right? They did increase from the services. So more revenue ever so slightly, but a decrease in cost of sales, right? And cost of sales of services slightly making up for that increase in services, going ever so slightly up, but obviously, the billions encompassing more than the couple millions that they spent in increase here. But very good as a whole here, guys. Total cost of sales was down as a whole 3% on a comparable basis. So that's where most of your increased EPS and increased margins came from. It didn't come from top line growth. Truly, it really came from a reduction in your cost of sales. And here's your gross margin. The gross margin that they were talking about, sitting roughly at about 46%. Your net income for the quarter here, guys, right? You got to do it together here. So your net income for the quarter, 33,916, right? Divided by your total sales, 119,575. That's roughly 28.3%. 28.3% here, guys, is better than most of their recent quarters. Take a look at most of the recent quarters for the past year. You can see here a bunch of 22s, 25s, 24s, 25s again. So now Apple delivering a very good quarter, 28% net margins. Very, very, very good. So here is another breakdown of their segments that I want to show you. We're not going to cover too much more on Apple, but I did want to show you the segment breakdown here. So you'll see net sales by reportable segment. America's up, Europe up, China down 13%. Here's your 13% decline, right? Japan up, rest of Asia Pacific up. So only China pulling back. Here's your net sales by category. iPhone sales, there's your 6% iPhone sales growth. MacBooks up ever so slightly here, guys, quarter over quarter on a year-over-year comparison, right? iPads down significantly, guys, and Apple has not released a new generation of iPad this year, contrary to what they've done in previous years. And their wearables division also ever so slightly down from previous comparables. But the real boost is here in your services. So you can see a couple lines of businesses down, guys. Significant decreases in iPad sales and wearables, but iPhone sales, Mac sales, and services really making up for it. So very, very good quarter as a whole by Apple. Nothing truly bad to say about them other than the fact that they're not growing their top line revenue as fast as they should be. So here, once again, is your cash generated by operating activities. Very, very, very solid, right? So in terms of your cash and cash equivalents at the end of your quarter ending and the end of your fiscal year, right? So you'll see, guys, that it's very, very good. Cash and cash equivalents now sitting at roughly $42 billion. And Apple really has never had too much of a problem with its long-term debt at all. You can see that they usually always maintain a fairly decent level. They generate a ton of free cash flow on a quarter basis. And their debt now sitting at about $124 billion, right? So they will just continue to try and build their cash pile in terms of now being sitting on $42 billion. So it's roughly a third of their total outstanding debt here, guys. But they do have, generation of free cash flow on a considerable year-over-year basis. So we'll see the total number. The total number should be bringing them as well, another $40 billion in free cash flow. So that's going to be able to help them bring down some of that debt as well. So balance sheet, not as solid as Microsoft's, but still very, very solid. You'd be hard-pressed to find anything bad about this Apple report other than the fact that the revenue is kind of slow. So those are pretty much all of the earnings reports here, guys. Apple, I do like Apple in the lower 175 region, like I've been saying. So if we do have a slight little dip here, potentially over the next couple of weeks or month or two, I will be looking to purchase some Apple here, make some plays down in the 175, 176 range. I was just tighten up this monthly range. So that's everything I had for your earnings, guys, today. Hope you guys appreciated the deep dive into those companies. And I hope I was able to highlight how these companies are going up so much in the after hours. It's very good increases in their EPS, net margins, and free cash flow, which is exactly what we want to see in companies that we look out for. So let's now get into our analysis, technical analysis for your major indexes. So the bulls, guys, today, they had one job to do, right? I'll bring it up again, right? We were coming up on a very dangerous area. If we would have had one more negative day, we would have came down into the 50, potentially 60% retracement area of this entire move, and that could have opened the door for the bears to have a possibility of setting a daily downtrend and weekly consolidation. But the bulls said no, just completely reversing, and now very significant gains in the after hours after your big tech earnings. So tomorrow we should be breaking up green again. This would just mean your daily higher low is set at this point, 482.64, and now we are going to move in for the continuation of the daily uptrend here. Just keep in mind, though, the weekly now still getting ever so slightly overbought on SPY as a whole. Your monthly continuation at this point just continues, but just keep in mind here, guys, that February seasonality, we may just be running into a blow off top with a lot of these tech earnings. And if they do pull back, that would be cue for a little pullback. Now, at least they'll be pulling back from a higher area, so they have tons of cushion room to give, but it may translate later in the month here to a slight depreciation in your indexes. Now, moving on to QQQ. QQQ actually lost the daily uptrend, having set the daily downtrend yesterday with the Fed FOMC. We were also looking at the total size of retracement in terms of your most recent low down here, 50%. This is what we were worried about yesterday, coming all the way down to the 618, potentially opening the door for just continued daily downtrend and continued weekly consolidation back into our zone here, 405 down to about 385. 405 to 400 was the most likely target. Your 12 EMA was right there, but the bulls saying no. So tomorrow, this should have a significant jump, 1% in the after hours. So now we should be pretty much back up to 425. Bulls will be looking to recapture this daily uptrend. That will be a break of 428.36. Break that, your daily uptrend capacity is potentially resumed by the bulls as they seek for higher levels. And on the weekly, we're still weekly overbought on your QQQs ever so slightly, right? But as of this week, these past 2 weeks consolidation, we just may be looking for the weekly higher low for further continuation, potentially into one of our last legs before some more further extended consolidation, potentially needing to consolidate here February and March in the market. So I'm still of the opinion, guys, that late February into March may be a period for consolidation for the markets, but you may just have a bit of February seasonality, especially after these bullish earnings. We may just have a last little rally here into new all-time highs before pulling back a little bit further. So most of the fear has been alleviated, but still running overbought here, guys, and still in a fairly greedy market environment. Now moving on to your XLF financials, beautifully recovering the losses yesterday, guys, setting the daily higher low today pretty much, right? Almost recapturing your hourly uptrend. If they do set a new hourly uptrend into tomorrow, your daily higher low is set. We're just going to be looking for the continuity of the daily uptrend at that point, beautifully rejecting from our 12 EMA into today. So just keep an eye here, guys, right? Bounce and then potential further trend increase. We were always looking for this area as a potential retest zone, right? This 38 down to about 37.50 area was the sweet spot. Didn't quite get right down into that area before putting in our daily higher low. So just looking for that daily higher low to potentially lead to further trend expansion as we just continue on this second leg up on your weekly in terms of financials. Financials getting ever so slightly overbought on the weekly, and contrary to QQQ financials, unless we're in a massive recovery mode like 2021, right? Financials don't tend to stay overbought that long. You can see we do have some few overbought conditions here when the markets are really rallying hard. So we could potentially continue these overbought conditions for a little bit more, really pulling us into this $40 area. 41 area is going to be your next area of resistance here for the all-time highs. But I'd be very surprised if your financials can just smash the all-time highs in one clean break. We may just need to create the two-step opportunity with a slight pullback into late February here. So we'll see how we deal with that. But fairly pleased here, guys, that the yields continued to drop over the course of the day today, which was very good for financials. So seemingly after Jerome Powell's conference yesterday, that was one of the main things we were looking at is the negative correlation that we had, or the positive correlation that we had. Usually we have a negative correlations, right? If yields go down, usually markets go up. But yesterday, markets were going down after the fear sell-off after Powell, and yields were also going down. So you had positive correlation from yields, but yields are the true sign here, guys, that the markets know that they will be coming down over the next 12 to 24 months. So big yield repricing to the downside should be very healthy for bonds, and this should also continue to be very healthy for financials as well. Now moving on to XLV Healthcare. XLV with a tremendous recovery here today, up 1.3%. So daily downtrend was set, engulfing move by the bulls, and now we still have not set the daily higher low, right? So the loss of the hourly trend didn't quite happen, right? We're still pretty much now recapturing this. Didn't last quite past a full new day, right? So hourly downtrend attempt by the bears this morning in your pre-market, but as soon as the markets open, you can see engulfing move by your bulls right here. So daily move higher simply continues at this point, right? So now bulls are looking to set the new daily higher low for further trend expansion. So when this move tops out, looking for a daily higher low for further trend continuation. Keep an eye, healthcare not yet overbought as a whole. On to weekly leg number 2, getting very close to your all-time high area of resistance. That's going to really be 143 is your final stop before new all-time highs. Healthcare with very good performance here, guys. And we do have one of my favorite plays reporting earnings here tomorrow. Couple healthcare plays, as a matter of fact, right? But one of my favorite ones is going to be AbbVie. So very curious to see how they do over the course of tomorrow. But healthcare looking very healthy, guys. This rotation is beautiful. Financials, healthcare, and now QQQ pulling up. Market still just remains healthy. IWM Russell recovering very nicely after yesterday's sell-off. Keep in mind, growth stocks are most affected by the Fed's comments, but considering the fact that yields continue to come down today, that's why the Russell was able to recover to the upside, right? Because a lot of their debt is priced in the form of long-term yields here. So as long as yields keep coming down, that should be bullish news for the Russell. Now, daily downtrend was set by the bears. We're just going to be looking for a recapture at a certain point of the daily uptrend by the bulls, but everything looking fairly decent here, guys, on IWM. You see it best on the weekly. What we're looking for on the weekly, potentially a tightening range as we continue to struggle with the past 2 years of resistance at this point. Will the bullish catalysts from today, from your tech earnings, pour into IWM and give them a shot at potentially continuing this weekly uptrend to the upside? We're going to have to see tomorrow, but as of now, your bulls still dealing with a little bit of resistance. Can't say they're fully out of the woods until we really reset this daily uptrend to the upside. Need to see an engulfing move past 199.50. Give me that engulfing move, then can potentially break out, retest the zone, and make another attempt here, guys, at closing with a weekly uptrend above this area of resistance. So Russell looking fairly good in terms of your recovery. Now, lastly, the Dow Jones. Dow Jones pushing to almost new all-time highs here today, right? So very beautiful continued uptrend by the Dow Jones at this point. Daily higher low was pretty much set over the course of the day yesterday after having lost the series of hourly higher highs and higher lows, slightly lost over the course of the day yesterday. Bulls able to engulf here today. So hourly downtrend was never set. The last time it was set was over here. 37,800 is still your daily higher low for further trend continuation at this point. So just going to be looking to push past these highs. No red flags as of yet. Still using this 12 EMA. Look at how well the bulls have protected this 12 EMA, the yellow line, this entire time. So until we see significant loss of that, no weekly trend pullback in sight. Still fairly extended from that 12 EMA, guys. Dow Jones usually doesn't get this extended from the 12 EMA. You can see it usually hugs it pretty tight even when we're in full rally mode. So a little bit overbought currently, even on your RSI mode at the current time. You can see Dow Jones can stay a little bit overbought for a considerable amount of time. 2018 was a little bit of an outlier in my opinion, but as you can see over the past couple of years, usually it does hit overbought on the weekly and then tends to slightly pull back. I'm not saying we're expecting a massive pullback, but at least a little bit of sideways consolidation potentially in the end of February into early March. But as of now, weekly bulls full control, weekly uptrend in motion. And as we pointed out yesterday, your monthly uptrend looks absolutely gorgeous too. So your daily bulls at this point just remain in full control, guys. Daily 12 EMA and no real major loss of your 4-hour 12 EMA in recent times as well. We are looking for that break yesterday, but bulls just saving the day today. Now, let's move into our major tech names here, guys. So major tech, Apple, nice little recovery, but down in the after hours. So pretty much down to about 181.20. This is going to open the door for some short puts for me potentially over the next week in the mid 170 range. As we saw Apple earnings, they weren't that bad, but obviously investors a little bit disappointed by their relatively flat revenue growth here. And 2024 as well, guys. I showed you that article from a couple days ago. The iPhone sales for this year are not probably going to be substantial unless they really come out with something fantastic towards the later end of the year with their September new iPhone 16 release. But that has to be seen as, of course. But as of now, guys, relatively flat outlook for revenue once again for the year for Apple, but decent earnings report. At least they're able to grow their bottom line with a little bit of help from their cost of sales coming down. So Apple currently still daily consolidation. We were looking for this yesterday, right? If we pull back 100% of the move, which we have with the earnings move. We'll see how it opens tomorrow, but now we're back challenging these lows here, guys, right? These 180.34, we're chilling at about 181.19, but really a full recapture engulfing move by the bears at this point. So at this point, the best you can hope for, guys, is to hold these lows right here and potentially set up for a tightening range. It's going to be so hard for the bulls to V-shape this entire move. In my opinion, the best you can hope for is potentially a lower high. Going to struggle with this area, right? 190 down to 187 if we bounce as resistance, and potentially set a tightening range here as the bulls further accumulate. Obviously, if we lose these lows, it would be quite noteworthy. Why? Because we would then be in a weekly downtrend. So these lows are very, very key. If we end up in a weekly downtrend here, guys, we're just going to be on the monthly in a monthly consolidation range. At that point, if we set the weekly downtrend here, guys, into tomorrow or into next week, at that point, guys, we have to look out for the monthly levels. 165 is going to be the area to watch. Cannot lose that, or you end up in a monthly downtrend. We need to have a tightening range with higher lows, right? Need to see the higher lows play out. I don't mind if they consolidate as long as they're consolidating in a healthy way. So you need to hold those two levels. So keep an eye out on that for Apple. Going to be very tough for this massive short-term recovery. I don't think the V-shape is the likely scenario. We may just, best case scenario, bottom out, triple bottom, and then potentially accumulate sideways here as Apple wait for more confirmation that Apple is doing better than expected, because Apple's just not doing amazingly right now, guys. The growth is just not there. Now moving on to AMD. AMD, nice little performance on the day, 1.66%, and a boost in the after hours here from your larger tech earnings. AMD obviously having nothing much to do with the rest of big tech, but still getting a benefit of a little bit of a boost here. So AMD, we were challenging the lows, right? So daily uptrend was set in motion, and now the bears came back 100% of your most recent move. So the expected move at this point, guys, is still a lower high for lower low continuation. Now, with the momentum of the stock, can we pretty much V-shape this to all-time highs? And I wouldn't be surprised. Yes, but we covered their earnings support, and I wasn't very happy with their earnings, guys. So we're kind of getting a little bit overbought, not only on our RSI timeframes, but also fundamentally, guys, the valuation now at this point is really, really up there. So a little bit rich. So I'm expecting at this point with 100% retracement of your most recent move, we are just looking for a daily high, lower high for potential lower low continuation, maybe setting up for the daily downtrend here for potential weekly consolidation. If that happens, right, daily downtrend confirmed, just looking, guys, once again, weekly higher lows, anything pretty much above 134.52, just looking out for weekly higher lows for a potential next stab at a new all-time high. But if the bears take back too much of this move, may just end up with either sideways consolidation or weekly downtrend potential here, leading into monthly consolidation as AMD has to grow into its current valuation. Most of this move, guys, was not driven by an improvement in fundamentals. It was driven by speculation and an increase in their price to earnings multiple. So two only ways that a stock is going to go up. Number one, their fundamentals are improving, and as they're based on measures of either price to free cash flow or price to earnings, that is what's going to give them the lift. But in this case, it was only speculation. The fundamentals of the business largely remaining somewhat the same, but we just had a lot of speculation bid this one up. So that's why it's a bit overvalued right now, but looking decent. I'm just potential wary of this daily downtrend setting up here. Maybe a time for semiconductors to take a little bit of a breather. Now moving on to Amazon. Amazon smashing it up to about 170 in your after hours. So we were looking for daily uptrend continuation. Daily higher low was set here. 150 was your daily higher low, and bulls really doing a great job here. At this point, we're all the way up to 170. So your daily uptrend simply continues at that point. As soon as this move up on the daily from 170 tops out, just looking for a new daily higher low, anything above 155 pretty much. 155, just going to be looking for a daily higher low. Tons of space by the bulls now. And your weekly should be closing absolutely gorgeous. Weekly uptrend at this point simply continues. We're all the way up to 170. So even if we do, similar to Netflix, if we were to lose the daily trend up into these higher levels here, potentially dealing with a little bit of this resistance up here, 165 to 170 zone, there's so much space now, guys, right? Anything above 145, just looking for a daily, weekly higher low for further trend continuation. And Amazon is going to have one of their best years ever, in my opinion. I think that Amazon is going to be the major tech stock here that has the best outperformance, them potentially NVIDIA as well, with some of your best outperformance for the year potentially to come. Very good things for Amazon. Bulls in full control. Now moving on to Google. Google still struggling after their earnings come down right now. So up a little bit on the day, 0.64%, and a little bit in the after hours out after your big tech earnings here. So really coming into the lows here, guys, 140.65 was your most recent higher low. It was a beautiful daily uptrend, but the bears taking back so much of the move. So best case scenario for the bulls is putting in a sizable enough bounce here, guys, to either potentially reset for the daily uptrend. For the daily uptrend reset potential here, guys, need to see a bounce to at least about 150. If you can bounce from here to about 150, then the bulls are set up nicely to potentially recapture this daily uptrend in 2 steps. But if the bounce is somewhat weak, talking about maybe up to 146 before rolling over, very possible we set the daily downtrend for Google. At that point, you'll just be looking for weekly further consolidation into our area of support here, right? These 2 yellow lines, previous resistance for a long time. Should be newfound support. 140 down to about 138, and that's your weekly higher low as well. Weekly higher low about 137, just below that mark. So looking for Google to really protect this area with its life at this point. I would like to see a tightening of the range, potentially a very nice tight accumulation range above our previous big area of support would be very good as Google just deals with the aftermath of its earnings. Its earnings were fairly decent as we covered on the channel yesterday, just the market reacting somewhat of an overreaction to the downside in my opinion. So protecting these lows fairly decently here, guys. But the lower we move into this area, the more that the bears are set up for a daily downtrend reversal potentially. So need to see the bulls have a hefty enough bounce. But as of now, guys, the bounce isn't started. No recapture of your hourly uptrend. We'll see if they can do that into tomorrow. So then your daily bounce will be underway. Then we measure the size of the bounce to gauge whether the bulls are set up nicely to recapture or whether the bears potentially have the stab at a daily downtrend and further weekly consolidation. So moving on to Meta. Meta looking very good in the after hours, right? $450. So Meta never really lost anything over the past couple of days, right? So Meta was always in a very healthy daily uptrend. After yesterday's price action, we were saying anything above 359 was just looking for a daily higher low for further trend continuation. Well, now that we're at 450, we got that daily trend continuation, right? So at this point, guys, as soon as we pull back from this move, going to be looking for a daily higher low, anything above 388. Daily higher low, tons of space now. Weekly looking absolutely gorgeous all the way up to 450. So weekly uptrend was never lost as well. Meta just continues this, but now we're going to be really overbought on the weekly time frame after the open here tomorrow. So could be a decent time here to write some covered calls on Meta if you're a long-term shareholder. Should be providing some very juicy premium into the day tomorrow. But Meta bulls, just full control here, guys, right? Monthly uptrend, simply beautiful at this point. Weekly uptrend, great. Earnings were great. Guidance is great. Getting back to profitability, everything working in the right direction for Meta. Just going to be very overbought on your short-term timeframes right now. Now moving on to Microsoft. Microsoft recovering nicely here after yesterday's drop down after earnings. Microsoft's earnings were very nice, but considering the amount that they'd rallied, guys, anything other than a ridiculous beat was potentially going to be met with some downside here. So Microsoft coming ever so slightly down, still looking for the daily higher low at this point, anything above 385, just looking for a daily higher low. And the bulls recovering nicely here today, right? Resetting the hourly uptrend over the course of the day. So potentially having set the daily higher low yesterday, coinciding with your 12 EMA. Nice. Like to see that here, guys. So potentially going to be looking for a nice little recapture here of the daily uptrend or just continuation of your daily uptrend by the bulls right now. That would be a break of your previous all-time highs, obviously. Weekly never really looked in jeopardy of losing the weekly after this beautiful breakout. Weekly uptrend confirmed. And I was saying yesterday, if for some reason the sell-off on tech continues with bad earnings tonight, let's say, well, Microsoft had tons of space for the weekly, and that does not change here, guys. Even if we do potentially roll over on Microsoft daily downtrend, well, your weekly has tons of space, guys. Anything above 366.54, weekly higher low. So moral of the story here, guys, right? The short-term daily bulls on a lot of these things were getting quite overbought. We were potentially looking for a reversal if earnings tonight were going to be bad. But with earnings having saved the day, your daily trends up just simply continue into slightly overbought conditions on most of your weekly timeframes across big tech. Now moving on to Netflix. Netflix not looking bad at all either. Netflix actually looking very good, right? 0.6% to the upside. So just really consolidating your higher levels here. But now we have to be careful. If Netflix loses these lows, 561.55 would be a daily downtrend, and that would just mean weekly consolidation is in effect. But if Netflix tomorrow breaks these highs, daily higher low is set at this point at 562, and we're going to be looking to break this big range that Netflix has been beholden to in 2020 and 2021 pretty much. This is going to be the range to watch. We need a break and close above our 575 level, something that Netflix still hasn't done. And at that point, we'll be targeting up head resistance of about 617. So Netflix still struggling a little bit, but I like to see this. If we get a breakdown of the pattern, guys, just such healthy weekly consolidation, right? Weekly uptrend is beautiful on Netflix, looking for the weekly higher low, anything above 460.88. And if we just get the daily uptrend continuation at this point, guys, it's going to be a break and close above on the weekly, maybe next week above this area. And that's really going to be able to use this weekly area as support if we do pull back here coming into the end part of February and early March. So really need to mount above this level to use it as support. Now moving on to NVIDIA. Good performance on the day here, guys. Today, 2.44% to the upside. So NVIDIA yesterday, right? never truly losing the hourly trend. So take a look at NVIDIA here, guys. NVIDIA just consolidating sideways, never really any massive loss of your hourly trend to the downside. So this daily move up, guys, simply just continues. This is absolutely insane at this point. They can't even put in a consistent hourly downtrend for more than a couple of days. Bulls still in full control, heavily overbought on the daily, obviously. So still looking for that daily pullback. As soon as this move tops out, which will be a significant loss of your hourly trend and also a loss of your 4-hour 12 EMA, which is this yellow line right here, right? Just keep an eye on that. Daily consolidation will be underway at any point. Anything above 473, just looking for a daily higher low for further trend continuation. No earnings yet for about 3 weeks on NVIDIA. Weekly looking excessively healthy as well. Just so tough to buy up here, guys, right? Weekly overbought conditions, daily overbought conditions. I need a little bit of a pullback personally to be touching this. Extended very far off of the weekly 12 EMA. You can see when we extended this far off the weekly 12 EMA, yes, it did move higher, but for the most part, consolidated sideways, you know, over roughly that 2.5 month span. So going to be looking for some consolidation on NVIDIA eventually, right? Which could breed potential weekly consolidation as well. And your semiconductors as a whole, guys, right? We are looking fairly rich here, right? Very nice breakout, weekly uptrend, obviously, but could be some time for some consolidation on your semiconductors. Monthly as well is looking beautiful. Could just be due for some consolidation end of February as they've led the trade over the past 2 months. Now may just be time for them to pull back and let some other sectors do the rotation. Now moving on to Tesla. Tesla still struggling here, 0.84% to the upside, up a little bit more in the after hours, but still looking to protect these lows. 181.17 here, guys, right? So daily downtrend is obvious, clear as day. The bounce was fairly weak. Now we're looking for the bears to potentially flush these lows for daily downtrend continuation. But can the bulls put in the unlikely scenario? After this size of this bounce here, guys, the likely scenario is just further retest of your lows, potentially daily downtrend. But can the bulls actually protect these lows and reset the daily uptrend? That would be a break of 196.20. Daily uptrend would be confirmed at that point, and then we would be looking on the weekly. Whoops, wrong thing I deleted. Then we would be looking on the weekly. How much of this weekly move can we recapture? And it's a big one here, guys, right? Very big amount to recapture. You need to see the bulls get at least up to about 225 to have a healthy chance at resetting the weekly. But all in all, Tesla should do fairly good if these yields keep decreasing. Keep in mind, guys, right, that we will need rate decreases by the actual Fed to probably trigger more bullish price action in terms of Tesla. But as long as your yields are decreasing, that means that the banks are also decreasing at the same time. Where are they? The banks are decreasing at the same time their obligations for financing. So should be playing off nicely for Tesla, but Tesla's still not out of the woods here, guys, right? The lower low is highly likely at this point with any negative red continuation or negative news out of Tesla to the downside. Just keep in mind our downside targets remain anywhere between 180 and about 165. Horizontal area of big support in the past, and the downtrending channel line is there as well. So nice little area of confluence. I'll continue to play Tesla if it is in these lower area here in terms of writing short puts. Decent area for a little bounce play, but bounce play, still not a lot of confidence in it. Now moving on to Palantir. Palantir up 1.5% and an additional 2.33% to the upside. Potential for a nice little recapture here. That's what we're looking out for here, guys. Daily downtrend was set. If we can potentially recapture over and above 1726, the bulls have a chance at engulfing this, resetting the daily uptrend to the upside, but not a lot of trading days, guys. 2 trading days before their earnings pretty much on Monday. So price action going to be fairly muted. I don't think we get a break here, guys, of 1565 before your earnings, and even to the upside, highly unlikely to get a break of your 1834. This massive range that we've been stuck in here for the better part of the last month and a half. On the weekly is also looking not the best, right? Weekly higher low is set. If earnings are bad, we will get the weekly downtrend, and we will be looking for support here. 1550 down to 14. Closest possible to 14 is where I'm going to be wanting $2 cost average, but earnings are going to be a big catalyst. It can really go either way here, guys. The break of the downside would just be weekly downtrend confirmed. Further monthly tightening range at this point, right? And if we get a break to the upside, going to be looking really at this point, guys, for 2 levels. Break to the upside, 1727. Give the bulls a chance at resetting the daily uptrend. But after earnings, guys, if we can break 1832, that would be fairly significant. It would break this most recent weekly lower high and potentially send us up into a new weekly uptrend. So earnings are going to be absolutely huge for the short-term momentum of the stock. If we get momentum to the upside here, guys, I do see us starting to retest these 19, potentially even $20 levels for some consolidation. So we'll see what happens with that. And now PayPal still in your tightening range. This is what we are expecting for PayPal. PayPal doing exactly that. Earnings with next Wednesday, so price action should be fairly muted here. I'm not really expecting a break of 56, the bottom end of your tightening range here, or the top end much before your earnings, but I do think earnings can move it that much in either direction. Keep an eye. The downside is about 9% and the upside is about 9%. So we'll see how PayPal is set to perform on their earnings. Should be a very volatile earnings period. Investors are expecting a lot of good things coming from the new CEO in terms of guidance for the year, reduction of costs, boost in EPS, and we want to see top line revenue growth as well. And free cash flow is going to be very important. They have been able to grow their top line, but EPS growth hasn't been outstanding. It's been good, but hasn't been outstanding. But it's really the free cash flow. Free cash flow has been flat for PayPal for a certain while now. So PayPal just looking to perpetuate the tightening up of this range. If we get a break before earnings, 64.50 to the upside, that would be daily uptrend, has been recaptured by your bulls and will be looking good coming into earnings, setting pretty much your weekly higher lows at this point, looking to really break and close above this downtrending trend line, which is currently sitting at a level of about $64. So that's going to be very, very crucial, guys. Need to just maintain this weekly uptrend and start closing in the high $60 range if we really want to see PayPal break out and have some decent upside targets. Earnings is going to be absolutely huge for them. We're going to hear for them for guidance from the year. But looking good. The tightening range is looking good. If we get a little bit of a breakout before earnings, it's really going to put a lot of room, to where this downside target, $60 to about 57, should be acting as very good support. Even if earnings are a disappointment, we should have some very decent support and not lose these weekly lower levels coming after earnings. So that's pretty much everything I had for you guys today. Hope you guys enjoyed the video as always. And if you did, consider dropping a like. Would really appreciate it for the algorithm. Consider subscribing to the channel as well. If you're new here, we do these recaps every day after the close and do earnings all throughout earnings season when there are noteworthy companies to do them on. And lastly, guys, if you have any questions, please leave them down below in the comments. Anything, technical analysis, macro, options plays, stocks you want me to look at, just keep writing the comments. I really appreciate your feedback, guys. So take care. That's pretty much it for today's video. I'm going to see you guys tomorrow after the close. So we're going to do the portfolio recap there as well. So take care. See you tomorrow and peace.